Hello, my name is Laura Chipp and I'm director at VatNav. Thank you very much for watching our YouTube channel. So today we're going to be talking about UK VAT refunds for overseas businesses, or what in the VAT world we call 30th directive reclaims. We're coming up to the year end of 30th of June, which is an odd year end to have, and one which has only really existed post Brexit for most businesses. But I thought this was a really good time to bring you some information about the refund process, the eligibility, and the timings. So let me just share my slide pack. Okay, so we don't see UK VAT being incurred for overseas businesses all the time. It's not on every single good or services. It's just certain goods and services. Obviously, the first thing to check when you see UK VAT on an invoice from a supplier is that it's actually properly due. Now, we're not going to talk much about goods. Normally, if an overseas business is using goods in the UK, we would normally question whether that business has actually a UK business activity, in which case the most appropriate route to recovery may be via a UK VAT registration. But it is possible for some VAT to be incurred on goods for an overseas business. But the main thing we'll be talking about today is services. Now, the general rule for services sold to an overseas business is that you wouldn't normally see UK VAT on most services because the place of supply, so the place in which VAT is due, is where the business customer is based. So if you have a business located in, say, the US or Germany or anywhere other than the UK, for a lot of services supplied by UK suppliers, you wouldn't expect to see VAT on the invoice because they're outside the scope of UK VAT. However, there are certain services on which UK VAT will be incurred regardless of the location of the business customer. Now, the most prominent examples of this that we see are hotel accommodation or other sort of sleeping accommodation. Transport, not all transport, because a lot of transport in the UK is zero rated. The key with transport is where you have a vehicle with a capacity of less than 10 seats, then you would expect to incur VAT in the UK. So taxis, some, I suppose, helicopter rides, if you're that way inclined, but you wouldn't expect to see any UK VAT on things like coaches or rail because the vehicle in question has more than 10 seats. So land-related services, such as the hire of venues, so meeting room hire, some sort of exhibition space, in many circumstances, that would have UK VAT on. Admission to conferences and other events and attractions. So we see this a lot in the MICE arena, where we have people coming to the UK for a particular event and no other business activities themselves. Catering, so this could be meals in restaurants or in hotels or wherever, and car hire and the hire of other transport services. The majority of other services is not going to be a list of all, it's not going to be exhaustive, but the majority of other services, if you see VAT on the invoice and you're you're an overseas business, I would question whether that UK VAT is rightly due if it's a service that doesn't fall into one of these categories. So if you're an overseas business and you have incurred UK VAT, what VAT can actually be recovered? Because it's not always the case. So firstly, the VAT must relate to a taxable business activity. So you can't, obviously, if you have no business activities at all, so if you're an individual, you can't recover UK VAT on these services because it's not, you're not making any business activity at all. Similarly, if you are an overseas business and you do have business activities, but they're of a type that would normally be exempt in the UK, then the UK would refuse that recovery because a related or a similar UK business would not get the same VAT recovery. So examples of this are things like financial institutions, any landlords supplying only residential accommodation, some charities, some educational providers. If you have a large amount or wholly exempt activities such as those, then you may not see that you get a large VAT recovery in the UK. The business must hold a valid VAT invoice. Now, this is really important for the overseas reclaims. And we'll talk about what is included in a valid VAT invoice in a little while. But this is really important. They must be valid. They can't be pro formas. You must get a proper VAT invoice. There's no messing around with this one, because the overseas team at HMRC will review every invoice. And one important thing then is the VAT must not be blocked from recovery. So one way that VAT is blocked is a scheme that we call TOMS, which we at VATNav specialise in quite closely. Now, if an invoice falls under the TOMS scheme, it may be, for example, that your supplier has used TOMS, and this would normally be when you're not buying from a hotel or a transport provider themselves, but instead you are purchasing the service from a UK tour operator, for example. It may as well, if you yourself are a tour operator based overseas, and you are yourself supplying the service under TOMS, HMRC would also block the refund. However, if that is the case, then it would be worth us having a conversation, because it may be that your UK supplier themselves can do something about the costs in that case. The other way that might be blocked in this case is if it's for business entertainment. So, for example, if instead of you coming over to the UK and staying in a hotel with your staff, you're actually paying for clients to do that. In that case, we would normally say it's business entertainment and it's blocked. So that's the main things in order to recover UK VAT. But in order to recover it under the overseas VAT reclaim route, you must not be registered for UK VAT, or this is key, or required to be registered for UK VAT. So in a lot of cases here, what we're saying really is that you have no business activities in the UK. Nothing that you do has a UK place of supply, which means that you should be registered for VAT. So, for example, if you are buying in, let's say you're putting on a conference in the UK, you're buying lots of, meeting rooms, accommodation, etc. You're putting on a conference, and let's say you're charging admission to that conference to people. Now, you may be incurring VAT on, let's say, the venue and the catering and whatever else is included, which you have the right to recover because it's a taxable business activity, it's not blocked, and you hold invoices. But if you are charging admission to that UK event, then HMRC would say, well, yes, you can recover the VAT, but admission to a UK event is taxable in the UK. So you also need to be registered for UK VAT yourself. So that's another thing. We're not going to discuss that because we're talking now about the overseas VAT reclaims for people that don't need to be registered in the UK. But obviously, let us know if that's the case. We're very happy to help with UK VAT registrations and compliance. But in this case, we would expect the overseas team to say, well, you can't recover the VAT under this route. You need to go back and register for VAT, and then you can recover it. But we also want you to pay it on your sales as well. So not what you want to hear on a sort of backdated basis, but obviously useful to know. So yeah, so in order to use the overseas route, you must not be required to register for VAT. So, for example, these are all actually proper examples that we have seen. So business one, performing artist, sells the rights to her shows to a UK business and travels to the UK to perform and incurs travel expenses. Now, in this case, she's selling the rights to her show to a UK business. Now, in that case, the place of supply of that service is the UK, but the UK customer is required to self-account. So the performing artist herself is not required to register in the UK. But her accommodation and travel expenses are a valid UK cost that she is incurring. So yes, she is allowed to use the overseas VAT recovery route to recover the VAT in that case. Business two, a German building company undertakes work to a specific UK property for a B2C client and incurs travel expenses. Now, in this case, we'd be looking at that and saying, well, really, what we're looking at is a sort of land-related service in the UK, supplied B2C. Land-related services, normally we would expect to be a UK VAT-able supply. And because the B2C customer cannot register in the UK, we would expect that the German building company should be registered in the UK. So although they may be able to recover the VAT on their travel expenses, they would also most likely need to register for VAT in the UK and pay UK VAT on their sales of the building work. So in that case, we would not be able to use the refund, the overseas route. Business three, US company sells UK travel packages to non-UK businesses on a wholesale basis and incurs all the costs of UK tour services. Now, this is an area we've been involved in very heavily. And yes, absolutely, we've seen large refunds on this basis. This is a really important one. So this is where if you were an overseas company, you buy in UK travel packages, so travel packages that take place in the UK. You buy them in and you sell them on a wholesale basis to overseas non-UK businesses. Now, on that basis, the UK treats this type of service as subject to the general place of supply rule. So it's taxable where the business customer is based and not where the service takes place. This is only the case if you're supplying packages. If you're supplying just hotel accommodation on its own, for example, you would have to register in the UK. But if you are an overseas business, you're selling a package of travel services taking place in the UK, you have no right to register in the UK because the place of supply of your service is where your business customer is based. But you're obviously incurring all the costs of the UK tour services, and that is recoverable under the overseas route. This is where we see the largest volume of work. We would normally we have one claim where we're looking at over 2,000 invoices that we are seeking VAT recovery on this basis. So yeah, if you're an overseas tour operator selling UK packages on a wholesale basis, then I think absolutely it's a really good idea for you to look into this route. Business four, an investment company organises a conference in the UK for its staff, which is free to attend. It incurs venue and accommodation costs. Now, in this case, there's no UK service taking place. It is literally just a conference for the business's staff. So the business is not required to register in the UK. So it could potentially recover its costs under this scheme, but an investment company often has a lot of exempt activities. So we would expect HMRC to question how much VAT the business can recover, because if all its services or activities are exempt, then it may be the answer is no, because the VAT is specifically blocked. So there's lots of different examples of businesses who can and can't recover the VAT. So this is probably the first question to ask. I would suggest an advisor to make sure that you don't go through an expensive VAT refund process, which can be lengthy for no reason. So when you do have a valid claim, the claim year runs from 1 July to 30th of June. and a claim for that year must be made by 31st December. So now we are currently on, I think we're on about 27th of June. I lose track of dates. But so at the moment, the year 1 July 2023 onwards is now in time. Where we have any expenses incurred in the year 1 July 23 to 30th of June 24 must be with HMRC by 31st December 2024. You don't have to do it as a year-long claim. You can make up to 4 claims per year, so you could almost do it like a quarterly VAT return in that way. You do sort of 4, and it has to be at least 3 months between claims, but you don't have to do it every 3 months. So we've got one client that we sort of said, okay, well, you haven't done any this year, so I think they started trading in January, so we said, okay, we'll do January to May, and then you could do July to August. Whatever, it doesn't really matter, but those are the sort of stipulations. And for periods of less than a year, the total amount of the claim must not be less than 130. I don't really think it ever would be. I think I don't think most businesses would bother going through this process for less than 130, if I'm totally honest. And how do we claim? So it used to be a really tedious paper system where you had to get every single original invoice and send it in a massive pack to HMRC's team by post. You had all the stress of, will it get there, won't it get there, is it going to get lost? But now, luckily, HMRC have done a lot more friendly way, and businesses can apply online through the new SDES system. I think it's Secure Data Exchange System or something like that. We found this worked very well at the moment. We think the team have actually been incredibly helpful and responsive. We registered as an agent for SDES a couple of years ago now, and we had lots of questions on the setup to make sure we got everything right and valid. We found the team incredibly responsive and really friendly, and yeah, it was a really good process to go through. But it does take a while to get everything set up. So if you're looking just to do one claim, well, for many reasons, I'd recommend using an agent who's already registered with the system. I think the thing is, especially if you're going to start a claim near the deadline and you only have like one shot at it, I would absolutely recommend you use someone who is registered. So yes, we are one. I'm sure there are others, but this is not an advertising service of all the available agents. So yeah, do your homework or contact us. Either way, I'd absolutely recommend that, because you don't want to lose out on these claims. So very loosely, what we would need in general, in order to send to HMRC as part of the pack, is the VAT 65A form. That's just the form that HMRC used to ask all the required information. It talks about your own business information, your bank account details, your tax authority, etc. We also need what's called a certificate of taxable status. Now, this should be available from almost all tax authorities from your own country. Almost all tax authorities we've ever seen have some sort of version of this, but this can take some time. If you don't already have it, this can take some time to get from your tax authorities. I think a US client, it took a long time, whereas the Irish system, for example, I think they already have them mostly on their revenue online accounts. So I would absolutely recommend that before you, especially if you're getting close to the 30th December deadline, make sure that this is a priority to making sure you have that certificate available. The VAT 65A schedules. So this is what we mean by the schedule. So literally what you have to do is you have to fill out a line on this for every single invoice. You don't have to quite handwrite it, it is on the computer, but you can't sort of copy and paste everything down. You have to literally write it out line by line. So what HMRC have said is you can basically make your own in Excel. using their developer's guide. Now, this is something we talked with the HMRC VAT team at length about, because we did have a very large claim to do, and it's not practical to do a line item for every single invoice. So we did use the developer's guide. It is very exact. We use someone who I'm sure he will absolutely not call himself this, but I would say an absolute expert in computer technology and this type of service, because we wanted to get it right. There's very specific formatting requirements so that the document is read by HMRC's computers. So where you have large quantities of invoices, it's not necessary to just fill out this form line by line. You can use a sort of tailored schedule made up by yourself, but I would absolutely suggest using someone who knows what they're doing. So yeah, we now have those schedules available, tailored, and we know that they fit with HMRC's system. But this did take a long time to develop. So if you are trying to do it yourself, then make sure you have that time. And you need all original invoices available too, for HMRC to inspect. So an original invoice, it must have your full business name or an official trading name, your business address that should be in your own country, and it should be your registered address or an obvious address for yourself. The details of the supplier, so it needs to have their VAT registration number, their name, their address, a description of the goods or services and the relevant quantities, the net VAT and gross amounts, and at least the VAT must be in pounds sterling, the invoice date and the tax point, and a clear sequential invoice number. Now, there may be other details on the invoice, but these must be there for the overseas refund claim, and it must not be a pro forma. Where you have a pro forma invoice that isn't an actual VAT invoice itself, and we do see a lot of these, especially from hotels. So this really needs to be checked quite carefully. The other thing we often see is people getting copy invoices. Now, although these can be accepted by HMRC, there's normally going to be some extra work, because HMRC will want you to go to the supplier and ask the supplier to give a guarantee that these are a true copy of the original. So it's better to get a proper original VAT invoice for each of the claims you're making. So the claim process itself is that you will, it sounds, I mean, the first step, the claim submitted, that often takes weeks or months to do. So I don't want to kind of, make that seem like a not particularly large part of this. Where we have a lot of invoices, that claim submission can take a long time, because we need to obviously check every invoice, upload it to the system and the schedules. But yes, I personally would recommend that you use an agent for this. The thing is that if you submit a claim and half the invoices aren't valid, or there's question about whether the VAT is correct by the supplier, then that kind of makes HMRC think, well, we're not really sure we believe this claim. So it's much better to make sure, even if the agent comes back and says, we don't like this one, that's not valid, we'll exclude that, you should know that everything that is submitted by the agent is actually valid for the purpose of this process. So yeah, once the claim's submitted, there is normally at least a 3-month wait for HMRC to review and ask questions. I say 3 months, but at the moment we phoned HMRC last week and they were currently working on February. So there is a backlog. There will be even more of a backlog if you submit right at the last minute at the claim deadline. So claim submitted on the 30th of December may be looked at a month later than claim submitted on like the 23rd of December, because there's so many people trying to get to the deadline. So it's often better to submit a claim not so close to the deadline, but obviously it's not always possible. When HMRC respond, I would note that they normally set a deadline saying, please respond by X date, otherwise your claim will automatically be refused. So that's another reason it's a good idea to use an agent, or make sure that the email address you link the claim to is regularly monitored. We see some, not these claims because we do them ourselves, but sometimes when HMRC contact a client for something, they'll miss the deadline. VAT registrations, for example, are classic examples where the client doesn't monitor the email address. It's a sort of general info at email address. And because they haven't monitored it, HMRC will reject the VAT registration. Now, in that case, it's frustrating. We'd start the VAT registration again. In this case, we can't start this again if we submitted the first thing on, you know, the 30th of December, and now we're out of time to do it again. So obviously, for when we submit a claim, the HMRC questions go to my email address and I pick it up. But if you submit it yourself, you need to make sure that the email address you're using is regularly monitored by someone who knows what it will mean when a random email comes through from an authority that's in English, and the person doesn't just sort of say, I don't know what that is, and I'll leave it, which does happen, unfortunately, sometimes. So please make sure that you are ready to receive that communication. Once the questions are asked and answered, you'll usually get a decision letter from HMRC. Now, I've never seen one being touch wood. I've never seen one that says no, we're refusing. But sometimes HMRC will refuse a couple of invoices for whatever reason. And again, you can either accept that if you think fair enough, these were wrong to include, or appeal it. But yes, in the cases we've seen, the claims we've submitted are fine. But yeah, the whole process itself can take around 6 months from submission to getting the receipt of the repayment. Our own time limit. So yeah, we do submit claims. We're very happy to submit claims. We would normally, our process is we would have an initial discussion to make sure that you have a valid claim itself. Where we have less than 100 invoices, 15th of November 24 is our deadline. If you have more than 100 invoices, we need to start that process earlier. We would then ask that you send over all original invoices by the dates in question set out below, and all other final information, which includes the details of your business that we'll request, the certificate of status, and anything else we've requested by 9th December. If we get all that by that time, we commit to making sure that we get everything into HMRC by the 20th of December. And we would normally then expect HMRC to review sort of April, May time. Obviously, the earlier we get the information from you, the earlier that will come up. We'll be very happy to get information from anyone in sort of August, September, rather than, you know, late November. That makes our lives a lot easier. But those are our deadlines, and we commit to those. So yeah, I would absolutely recommend, it doesn't obviously need to be us that you use, but I'd absolutely recommend you use an agent to do this at least the first time. This is a long process often, and it can be a little bit bitty and kind of can get complex, but it's absolutely worth it to do. I think what I would say is that if your claim is less than about 2,000, it may not be worth your time and the expense of someone doing it, but anything more than that, I'd say it's absolutely worth going through the process. So that's our sort of fairly brief overview of the 13th directive process, or the process for reclaiming UK VAT by overseas businesses. We do these claims. We're very, very happy to help. Please contact myself or Paul. Of course, any other questions, please do let us know. Thank you.